Welcome to Talk Tickers. We're the deep dive into earnings calls, bringing you the essential insights nice and quick.
That's right.
Today we're getting into the latest from Dutch Bros Inc. That's ticker BROS. Their first quarter 2025 call, well, it painted a pretty interesting picture. So let's break it down.
Absolutely. And the headline really is strong growth. I mean, pretty much across the board.
Okay.
Total revenue saw a big jump, 29% year over year.
29%. Wow.
Yeah. And digging in a bit, system-wide same-shop sales, they grew a healthy 4.7%.
Okay. 4.7.
And that was driven by both more transactions, about 1.3%, and also higher ticket averages, around 3.4%.
Got it. So more people spending more.
Exactly. And interestingly, their company-operated shops did even better. 6.9% jump in same-shop sales there.
Almost 7%.
Yeah, with a really solid 3.7% rise just in transactions alone for those stores.
Okay. And profitability, how did that look?
Adjusted EBITDA was up too by 20% compared to last year.
Nice.
And they kept expanding, opened 30 new shops just in Q1.
30 more. Where does that put them total-wise?
Pushed them over the 1,000 mark. I think it was 1,002 system shops total at the end of the quarter.
That's a big milestone.
For sure. And looking ahead, their guidance for the full year, well, it seems they're feeling pretty confident.
Oh, yeah.
Yeah, they're saying revenue, same shop sales, adjusted EBITDA, all trending towards the top half of the ranges they gave before.
So things are looking up for the rest of 25.
Seems that way. And they're still planning on opening at least 160 new shops system-wide this year.
Okay, so strong quarter, positive outlook. Let's dig into what's really powering this. That 29% revenue growth is, well, it's pretty impressive. What are the main engines there?
Well, it's really a couple of things working together. Obviously, opening those 30 new shops helps a lot. That's new revenue streams coming online.
Right, pure expansion.
Pure expansion. But it's not just that. Their existing shops are clearly getting more productive too. Those same shop sales numbers, especially the transaction growth, tell you they're getting busier.
Yeah, that 4.7% system-wide figure, it suggests the brand's still really connecting, right?
Absolutely. It shows people are still choosing Dutch Bros. And like we said, the company-owned stores hitting nearly 7% growth, that's particularly strong momentum.
So what's the magic formula there? What are they doing right?
It seems like a few key strategic initiatives are really starting to pay off.
Like what?
Well, for one, their innovation pipeline, those limited time offers, LTOs, like the sweet cereal sips they mentioned, they seem to be hitting the mark, creating buzz.
So new flavors draw people in.
Draws people in, gets them talking. And they mentioned doing this even while comparing against really successful LTOs from last year, so that's positive.
Okay.
They also mentioned engaging merch drops contributing.
What else?
They're also keeping up with paid advertising. They mentioned elevated spending in both new and mature markets.
That's working.
Seems like it.
Yeah.
They specifically called out a positive impact on business and growth, especially, in those newer markets where they're still building awareness.
Makes sense. You got to get the word out.
Exactly. And then there's the loyalty program, Dutch Rewards.
Yes, the app. How big a role is that playing now?
It's huge. They said it now accounts for about 72% of all system transactions.
72%? Wow, that's up from last year, right?
Yeah, it's a 5-point improvement year over year. That's massive.
So most customers are using the rewards program.
The vast majority. And that's incredibly valuable for them. It means they can engage more effectively, send personalized offers, really tailor the experience.
Which probably drives more visits.
Precisely. It creates this feedback loop. Better data, better offers, more loyalty, more visits.
Got it. And what about making it easier to order, the order ahead feature?
That's growing too. It's now about 11% of their transaction mix overall.
11%, is that everywhere?
Well, what's interesting is they said the penetration rates are actually higher in many of their newer markets.
Oh, really? Why do you think that is?
Could be newer customers are just adopting digital habits faster. Or maybe it's particularly useful during the morning rush, which they did mention.
Right. And it probably helps the stores run smoother, too.
Yeah, that's a key point they made. It helps utilize the walk-up window more effectively, which can improve overall throughput, especially when the drive-thru is packed.
Speaking of throughput, getting drinks out fast?
Yeah.
Are they making progress there?
They mentioned focusing on sort of fundamental operational improvements, looking at bottlenecks, productivity during those peak hours.
Yeah.
They said the early efforts are showing promising results. It's about things like staffing, workflow, the basics, but getting them right makes a big difference.
Yes, speed is crucial in that business. Now, something else that caught my eye was the food testing. They're expanding that.
They are. That limited test they started last year must be showing some success because they're rolling it out to more shops, from 8 to 32.
32 shops testing food. What's the goal there? Just add on sales.
It seems the main focus is driving incrementality, especially in the morning, getting people to maybe add a food item to their coffee order or even come specifically for food.
Okay. Drive frequency.
Exactly, drive frequency, but they're being careful, keeping the assortment tight, just 8 items, 4 hot to minimize complexity.
Don't want to slow down the coffee line.
Precisely. Maintain barista satisfaction and that all-important throughput. They're looking at a broader test and potential rollout through 2026.
So food is something to watch for the next year or so.
Definitely a key development.
And back to store growth, hitting that faith 1,000th shop in February. That's big. What's the long-term plan?
It is big, and they're not stopping. The aim is ambitious. 2,000 total shops by 2029.
Doubling again in, 5 years?
Roughly, yeah. They sound confident in their real estate pipeline and the ability to pick good spots.
Are the new shops performing well?
Seems so. They mentioned enhanced new shop productivity, which they attribute partly to better site selection and that pre-opening paid media push. They also mentioned they adjusted the pace of entering brand new markets back in 2023, giving those newer areas a bit more time to build awareness before expanding further nearby.
Smart. Let the brand breathe a bit.
You like the idea.
Now, Dutch Bros always talks about their culture, the broistas. How critical is that as they scale up so fast?
They emphasize it constantly. It seems central to their identity and they believe a key differentiator. Superior service, the whole vibe.
But can you maintain that culture across 2,000 stores?
That's the challenge, right? They point to their robust training programs and, importantly, a strong pipeline of internal candidates for operator roles.
Promoting from within.
Yeah, they mentioned having 450 potential operators ready, folks with an average of over 7 years tenure. That deep experience is likely crucial for carrying the culture forward.
Okay, interesting. Let's shift back to the financials a bit. Costs, any pressures there?
Well, beverage, food, packaging costs were actually favorable compared to last year, mainly because they took some pricing.
Okay, but looking ahead.
Looking ahead, they do anticipate some pressure, about 110 basis points, net COGS margin pressure for the full year.
No thanks from Pooh.
Mostly coffee prices and tariffs, specifically mentioned coffee from Brazil, Colombia, El Salvador.
Oof. Coffee prices have been volatile.
They have, but the good news for them, they say, is that they've already locked in most of their coffee prices for the rest of 2025.
So they have some protection there. They think they can handle it within the guidance.
That's what they indicated, yeah. Manage it within the existing guidance ranges.
Any other cost points? Labor.
Labor costs were a bit unfavorable. They cited wage investments, particularly in California, plus some strategic investments they made in shop leadership pay just recently, in early April.
Okay, so some cost management needed, but they seem to have a plan. How's their overall financial health? Cash position.
That's pretty solid. Ended Q1 with $316 million in cash and equivalents.
Nice question.
Yeah, and actually a net cash position of around $36 million. Plus, they have an undrawn revolver, so total liquidity is over $658 million. Lots of flexibility.
Plenty of fuel for growth then.
Seems like it. And one other small positive note. The average capital expenditure, the cost to build a new shop, actually decreased by about 10% from Q4.
Oh, getting more efficient there too.
A little bit, yeah. Every bit helps.
Okay, so to kind of wrap up the core results, strong Q1, good momentum carrying forward, digital initiatives clicking, managing costs, solid financial footing, and ambitious growth plans still on track. Is that a fair summary?
I think that captures it perfectly. The combination of new unit growth and strong performance from existing stores, plus those transaction-driving initiatives like rewards and order ahead gaining traction, it paints a pretty positive picture.
And that food test expansion is definitely one to watch for future growth potential.
Absolutely. Could be a significant driver down the road if it proves successful and they roll it out widely.
All right. Let's pivot now. Time for our This Is Not Financial Advice segment.
Let's get outrageous but plausible.
Okay, so Dutch Bros. We see this strong momentum, right? Especially with digital loyalty, order ahead. It's clearly working for them. Forget just thinking about BRO stock directly for a second.
Okay, where are you going with this?
Well, this isn't just about coffee anymore. It's about that digital relationship, right? Building that connection. So here's an idea. Given how much they're leaning on digital tools, maybe think about companies providing the infrastructure for this stuff, specifically for QSR loyalty and mobile ordering.
Ah, the tech behind the scenes.
Exactly. If Dutch Bros keeps crushing it with digital engagement, and you have to assume other chains are watching closely,
Right, they'll want similar capabilities.
then the platforms powering that growth could see a surge. Maybe look beyond the obvious big tech players, find the niche providers really specializing in this QSR tech space.
Interesting angle. So bet on the arms dealers for the QSR digital wars, essentially.
Sort of, yeah.
Yeah,
That's
okay.
one outrageous but plausible thought. What about you?
Okay, building on a different theme, they stressed that broista culture. They kept saying it's a competitive advantage, right? The
Right.
training, the internal promotion.
Yeah, they really hammered that point.
So, outrageous idea number 2, maybe look at companies that specialize in employee training and development programs, specifically within hospitality and retail.
Trading companies.
Yeah. If the Dutch Bros model, investing heavily in culture, training, promoting from within, proves super successful at maintaining service quality while scaling rapidly.
Other companies might try to replicate it.
Exactly. They might start pouring more money into similar sophisticated employee development strategies to gain an edge. So a long position in a company that provides those kinds of services.
Okay, I like that. Focusing on the human capital aspect that Dutch Bros highlights.
Right. It's about identifying that broader ecosystem that benefits from their specific strategic focus, not just the company itself.
So 2 different angles there, the digital tech powering loyalty and the human capital tech powering culture and service.
Plausible, yet perhaps a little outrageous.
Definitely plausible.
Yeah.
But remember, everyone, these are just wild ideas, thought experiments. Absolutely do your own thorough research before making any investment decisions. This is not financial advice.
Couldn't stress that enough.
So that really wraps up our deep dive into the latest Dutch Bros earnings call.
Yeah, we covered the key financials, the strategies, the growth drivers, cost management.
And even brainstormed some creative second order effects.
Indeed. Hopefully this breakdown gave you some valuable insights into what's brewing over at Dutch Bros.
What stood out most to you in this analysis? Or what questions do you still have? We always like hearing your perspective.
Yeah, let us know.
Keep an eye on those tickers and join us next time for another deep dive.
Until then.